What's up, guys, and welcome back to the channel. In today's video, I'm going to be covering two monthly covered call dividend ETFs, QYLD versus JEPI. And as you can see, my portfolio is currently $50,048.44. So let's get into my activity feed. I've already got it set up. As you can see, the last time I bought JEPI and QYLD was February 28th. If I go to the previous slide, you can see there's no more buys. So on March 2nd, QYLD paid me $26.86, JEPI paid $16.14, and then at the end of the March, QYLD paid another dividend of $29.04. And remember that number, and remember the 16 for JEPI. So next in April, JEPI was 20, QYLD was 28, so the dividend already dropped. And then in May, JEPI's was 16.34 and QYLD's was 24.72. And however, JEPI dropped, however, it stayed above that baseline of 16.14. Now in June, my QYLD dividend was 24.72. JEPI was 18. In June, QYLD paid again 24. In July, JEPI paid 21.69. QYLD paid 25.05. In August, JEPI paid 17.3. And QYLD paid 25.11. And so going from $29.04 to $25.11 doesn't seem like a big jump. However, that was a decrease in my dividend income from QYLD by 13.53%. So that is a significant number. Now, let's get into QYLD on Seeking Alpha. As you can see, it's currently trading at $16.56, where as you can see in the 52-week range, it is at $21.70. And in the 1-year chart, it is down 23.72%. Then if we go to QYLD's dividends, Seeking Alpha gives it an A+ for dividend yield at 13.21%. However, a D- for dividend growth rate at negative 23.24%. So it's definitely not what you are looking for in a dividend stock, is any decrease in the dividend is horrible. And now, of course, here, it doesn't show a payout ratio. This says the 5-year growth rate is 4.28%. But as I've shown you with my data and with Seeking Alpha, QYLD's dividend yield or dividend income has decreased. Now let's go to their fact sheet. And if you look, their reasons to consider QYLD seeks to generate income through covered call writing, which historically produces higher yields in periods of volatility. They've made monthly distributions for 8 years. They write call options on the NASDAQ 100. So let's go down. Their expense ratio is 0.6%, which is a very high expense ratio. That means you're paying $6 for every 1,000 you have invested. Now, if we go down and look at their top 10 holdings, they're honestly pretty great companies. You've got Microsoft, Apple, Amazon, Alphabet, C&A, Nvidia, Meta, Tesla, Pepsi, and Broadcom. So nothing wrong there with their holdings. And then next up, I want to look at JEPI, the JP Morgan Equity Premium Income ETF. As you can see, it's currently trading at $55.70. At their 52-week range is 62.6, so it's not down by a lot. And in the last year, it was down 10.79%. So it is outperforming both QYLD and the S&P 500. Now, if we look at their dividends, it says their dividend yield is 11.42%, which is an A+, and it's actually giving them A- growth rate of 52.89%. Then if we just look down here, you can see that their dividend yield is still really high. It's not 13% like QYLD's, but 11.42%. Can't complain about that. Then let's go over to JEPI's fact sheet. So they also generate income through a combination of selling options and investing in U.S. large cap stocks. seeking to deliver a monthly income stream from associated option premiums and stock dividends. So already just right there, them owning the large cap stocks and providing income from the dividends makes this a safer bet than QYLD. And so if we look, just they construct a diversified low volatility equity portfolio. And then let's scroll down. If you look at their top 10 holdings, they also have pretty great companies with AbbVie, Progressive, Bristol Myers, ExxonMobil, United Health Group, Hershey, Coca-Cola, Pepsi, Honeywell, and Eli Lilly. And then now I want to go over to the back test. So with $100 or $10,000 initially, reinvesting the dividends and displaying the income, we're going to do a back test with JEPI, QYLD, and VOO, the S&P 500. We're just using that as a baseline for comparison. And if I scroll down, so we started off with an initial balance of 10,000. JEPI came out in the lead at 11,722. QYLD is at the bottom of $8,935. And the S&P 500 is at 10,536. But keep in mind that this is just from the beginning of 2021 to the end of 2022. So it's only 2 years of results. So it's not that much to go off of. But what I did want to show was the dividend income. So as you can see in 2021, JEPI here in the blue is $771, and QYLD is vastly outperforming that at $1,325. However, if we go into 2022, JEPI is now beating QYLD at $1,286, and QYLD is at $1,149. So I did the math on this one, and QYLD's dividend decreased by 13.28%, and JEPI's dividend increased by 66.79% from 2021 to 2022. However, I felt like this wasn't a lot of data, so I ended up doing another back test, but this time it's $10,000, dividends reinvested, income displayed. However, this time it's QYLD versus VOO. And if we scroll down, so this one starts at the beginning of 2014 and goes to the end of 2022. If you invested 10,000, QYLD would have $15,904. The S&P 500 would have $24,567. So it definitely way outperformed QYLD. But then scrolling down, I just want to go to the income. And I'm not concerned with the S&P 500's income. So let's just look at QYLD. As you can see in 2014, their income was $1,058, and then it dropped to $1,000 in 2015. So it's already a bad sign when a dividend ETF is lowering their dividend. However, in 2016, it increased. However, it is not above the 2014 level. And then even in 2017, it increased by a little bit, but still under 2014. However, in 2018, the dividend shot up to 1,578. But then once again in 2019, the dividend dropped. And then it shot up again in 2020. And then shot up even more in 2021. But then once again, it went right back down in 2022. So this is just to give you guys more data and show you that even though QYLD's dividend income is trending upwards, it still fluctuates a lot, and a lot more than I want to deal with, especially when it's dropping over 10%. Honestly, even a 1% drop, I don't want to see in a dividend. I just want to see consistent growth in a dividend ETF or a dividend stock. And as I showed you guys with my portfolio, yes, my JEPI dividend, it fluctuated. It went up and down, but it never went lower than that $16.14. It got down to $16.34, but it never dropped below that baseline, which as you can see, QYLD dropped below the baseline, and then when it came up, it didn't go above it. So just going based off of the data we just looked at, If I was to invest into a cover call ETF, I would choose JEPI over QYLD. And so guys, thank you for watching the video. If you'd like to see another ETF comparison, on the left or the right is going to be SCHD versus DGRO. So go ahead and check out that video, and I will